Good morning, everybody. I hope you had a great weekend. Hey, Dave will be joining us in just a few moments, and we will get this show on the road. But I want to thank you for joining us today and encourage you that if you like what you're seeing here today, like our page at Statler Financial Services, and then join us every day as we do this and share it out there. We really would appreciate it. Hang on. Dave will be with us in just a moment.
Good morning. It's 8:39:21 here before 9. Time to check in on your money and find out what the Sam Hill's going on Wall Street this morning. Based on Friday, things look pretty good. Looking early this morning, things ain't looking half bad either. Let's see why and what the wherefores are. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. Good to hear your voice this morning.
Hey, good morning, Dave. It's good to hear your voice also. Friday was another barn burner day, great day on Wall Street. Before you give all the numbers of where we ended up, on Friday we talked about Wayfair and how they had I'm not going to say they had a good quarter because they still lost money, but it was a lot less of a loss than was anticipated. And man, oh man, their stock had a great day on Friday. It ended up almost 28% to the positive on Friday.
Just imagine you can lose money and have your stock go up 28% in one day. What a country, huh?
I mean, I tell you, something else, wasn't it?
I was telling you before we went off that before we went on the air. Yeah, they're advertising the snot out of the company these days. I think I'd seen that ad 100 times before I figured out what that catchy little jingle was saying. They're spending a running ton on advertising right now. It's obviously yielding results for the stock price. Anyway, we'll see what happens as far as whether or not they can turn a profit when they actually start getting held to the same standard the Amazons of the world are, right?
Exactly. So they're relatively new yet still, so they'll give them a little bit of time before they actually need to be in the black.
Absolutely. You mentioned at the outset, yeah, it was another barn burner day on Friday. Dow up 181 points, NASDAQ up by almost 68, and the S&P up by the better part of 18. And as we start this week out, well, depending upon your politics, you're either happy or sad because all the main market driving headlines to start us out today involve the president. He told OPEC to relax on price increases on the price of oil. So the price of oil is going down this morning, and they're giving Trump credit for that. He's announced that he's holding off on Chinese tariffs, and that's making Asia go through the roof this morning. And then there's a level of optimism over the summit with North Korea. Everything depends on Trump this morning. Is that a security blanket or a fright, I wonder, huh?
Well, I guess, like you said, it depends on which way you lean politically, probably. But I think it is. It does show that people do listen to him across the world. I mean, for oil prices to be dropping the way they're dropping this morning is huge compared to where they were on Friday.
Oh, heavens. Yeah, we were over $57 on Friday, and we're under 56 today, down 2.5%. And most of that decrease was right after the president said, "Hey, guys, relax." And doggone, they did.
Exactly. And so, and then the rest of the markets are heading green this morning. So Monday looks like it'll be off to a great start.
Absolutely. One of the things that's going to move us later on this week is going to come on Thursday. We get our first look at the first quarter GDP. Do I have it right? First quarter, first look?
I think it's actually the second look.
Okay.
But it's a month late.
Yeah, that's right. It's not. It's one of those things got us a little on the nervous side. You had a tip sheet pundit that was saying they were expecting it to only come in at like a 2% growth rate, and that'll be something that might move the markets a lot when it comes out.
Well, it is. I was reading an article by an economist that was looking at kind of the consensus estimates were that GDP will come in and slip to about 2% in the fourth quarter of 2018 after what we saw to be great quarters in the the second and third quarters. I mean, it was 3.4% in the third quarter, it's 4.2% in the second quarter. So a slide to 2% would put us on an annual run rate at below 3%. And the article pointed out that this would be the first time since President George W. Bush's second term, that we saw GDP that low.
Which is actually, given the fact that we were into a recovery for 8 years of the Obama administration. Some growth was expected, but yeah, we get down to the 2% rate and a 3% annualized growth rate. That, given what the president's been promising more than anything else, it's going to end up not looking the way investors look for it. That'll probably be the unbiased way of looking at it, right?
Well, yeah, because I mean, the administration was really out there saying, "Hey, we're going to generate 3 to 4% GDP growth," and obviously, if it's less than 3, we didn't meet that criteria.
Understood. The other thing that's moving markets this morning is last night President Trump announced that he's going to hold off on some of those tariff measures against China as we continue to talk, and evidently the talks were at the very least producing enough hope that they decided to hold off on some of the tariffs we were talking about slapping on Chinese goods, and that obviously helps the companies that do business overseas.
Well, I think it definitely helps the companies that do business overseas, but let's face it, it helps probably us too, as producers selling stuff, or us as buyers buying stuff. There's a lot of things that come from China, whether or not it's actually retail goods we buy or parts that go into things that are manufactured here in the United States. So in either case, that's going to help even us here in the United States.
Understood. Almost like an economic stimulus in the face of a GDP report we're not looking forward to. Probably good news for us as well as China. And the Asian markets just absolutely had a party off of that. Talking about individual companies, General Electric has been selling off its parts again, haven't they?
Yeah, they have. GE has struggled mightily the last year and a half to 2 years. And they're coming out now. They're going to sell their biopharma drug unit called Danaher. And they're going to get $2.4 billion for it. And of that, $21 billion is going to be in cash. And that's going to be a big help to GE as they continue to try to strengthen their balance sheet. And so their stock's been in the tank for a long time, but they're getting a real good boost today. They closed up on Friday 1.4%. This morning, they're expected to open up almost 15%. At least that's what it looks like right now, Dave. So that's some good things happening to the stock price at GE.
I noticed that the Danaher company, as they spin it off, that just because it's a subsidiary doesn't mean it doesn't trade on its own. It's also up big time as well as they spin it off. So those two stocks together ain't a bad place to be this morning.
No, it's really not. And GE needs all the help they can get here.
Long term, we talked about Sears selling off of all of their brands in the process. GE has been selling off a lot of their operating units that have been doing well. Long term, I got to wonder whether that's wise. Take the things that are actually your growth concerns that are subsidiaries and spin them off. It kind of leaves you without a whole heck of a lot when you're done, though, for the long term.
Well, you're right, Dave. It really does. And so, but you also have to wonder, one of the things I think GE is looking at now is, okay, what is our business? What is our business, and how can we focus on our business and not some of these other things? And so a lot of times you'll see companies like this who have lost their focus start to sell off some of the parts because it's not really their main business focus. And so, you and I have a hard time trying to decipher what's good and what's bad when they start selling stuff off. But as a board of directors, they've got to decide what's important to them as a company and move forward with that.
Absolutely. And in fairness, General Electric is probably the poster child for an over-diversified American company because, like you say, what does General Electric do? I mean, you really can't put your finger on it. They were a finance company. They made they made locomotives. They made home appliances. They pretty much had their fingers in jet engines. They pretty much have had their fingers in just about anything. And if you ask what General Electric does, you could probably get 18 different answers depending upon who you ask.
Exactly. And so a lot of times companies like that will go back to their roots and say, okay, what made GE what it is today, and let's focus on that.
Light bulbs.
There you go.
Now there's the future for you. Other company news that's affecting the markets this morning, Phillip.
So the only real earnings I have coming out this morning that I found was Berkshire Hathaway. Warren Buffett's big company. They did beat on earnings. They missed on revenue by a little bit. And in his annual letter to shareholders, one of his points was that he's having a hard time finding any large acquisitions given the price of things out there today. And so he's not been able to find any good deals. So obviously they're not buying things right now. They closed on Friday. They haven't come out this morning yet with any trades, but they closed on Friday down 1.2%. I'm sorry, 1.9% on Friday. So we'll have to see what happens this morning when they open.
Intriguing with somebody with that much money and that much to play with says, gosh, I got a whole lot of money. I'd really like to spend it. I just can't find anybody to buy. Interesting thought, isn't it?
Yeah, it is. It is. And then the other one, the last thing I have, it's not really an earnings report, but it is. We talked about a little bit on Friday where Barrick Gold was going to make an offer for Newmont Mining. It seems like now they're trying to go after and make a merger out of the deal, and so they've made a formal offer to Newmont Mining now, and just waiting to see how that comes up. Newmont Mining is getting another bump. They closed up 3% on Friday. They're up another 1.6% this morning before the market opens up. Barrick Gold is not, they're on the Toronto Exchange, so we don't get any pre-market trading on them. But they closed on Friday at $17.13 a share, up close to their 52-week high.
Investors have a tendency to get a little bit on the excited side when they see mergers and acquisitions going on. Looking at Friday's close again, setting the table, everything was up by 0.7 to 0.9% on Friday. Good day by any account. 45 minutes before we open this morning, Phillip. Can we keep that green ink going today?
Right now, it definitely looks that way, Dave. The Dow's up 162 points. That's 0.6%. The S&P 500 is up 0.5%, $13.80. Nasdaq's up about 0.75% at $53. Gold and silver both trading down just a tad, and then crude oil, like we talked about earlier this morning, down almost 2.5% to $55.88 a barrel right now.
We got to keep Trump talking about lowering oil prices. That seems to do some good. He doesn't have to do anything. He just says, cool it, and everything goes down.
Hey, I like that too. I mean, it's I had to fill up last night at $2.29 a gallon, I think.
Like I said, my exit strategy is a 34-mile-a-gallon car, you know. It does make a difference, believe me. Overseas markets, we were up in Asia off of optimism from the tariff decision coming out of our administration. Europe was mixed because England's got a bit of a challenge going on right now. Nobody knows whether we're going to put off the Brexit or whether it's going to be a hard exit. It's really a mess over there at the moment. So their markets generally trading downward this morning, midway through their trading day. Phillip, if I wanted to figure out how to turn this mess into a productive retirement for myself and my family, how would I find you on the telephone to make an appointment?
Hey, Dave, now that the market seems to be trending back up again, it's a great time to get an x-ray report done to make sure that your risk tolerance matches up with your portfolio's risk tolerance. To do that, give us a call at 382-0037. Catch us online at statlerfinancial.com. Follow us on Facebook at Statler Financial Services. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730. And Dave, I'm excited to say that you guys have finally started streaming that channel, right?
Absolutely. That's right. Newstalk730am.com. There's a streaming button just get below our plug for the Sebring Strong Fund. And you'll find a button that says stream, and absolutely everything we got on the radio, including the Statler Financial Radio program, stream to your cell phone. Isn't it nice to have something more useful than fake auto warranty calls on your cell phone, right?
Hey, it is, Dave, and I'm excited that the radio station's coming into the 21st century, man. I'm impressed and glad to see it happening. And hey, I'm back tomorrow and Wednesday. I'll be out Thursday and Friday, guys. But I look forward to talking to you tomorrow, Dave. Again, I want to thank you for joining us this morning as Dave and I converse about what's happening in the economy. Hey, if you like what you see today, please like and share this content with your friends. Thanks. Have a great day. I look forward to seeing you tomorrow. Bye.